Yesterday we launched our WWRD hotline. What would the regulator do? And we've had our first question come through. And the question was, what would the regulator think about the KBC Bank comments last week that it should cease its tracker mortgage review, that it was annoying and it was time to turn the page? Well, good question. It brought me back to a time when I was fairly new in the financial regulator. And it was 2012, it was a speech by Fiona Muldoon, who was then the director for credit institutions and insurance undertakings. She made a fairly hard-hitting speech in 2012 at the Banking Payments Federation conference. The topic for the conference, I think, was about how the industry had been humbled by their experience with the financial crisis. And Miss Muldoon proceeded to lay into them pretty much and let them know that they were not humbled enough and that they certainly had a distance to go before that trust and culture and behaviour in the banks was restored. So when I heard last week's remarks from the chief executive of KBC Bank, that kind of felt like we were in the same zone, because only 2 days before, Ed Sibley, who is Director General, Deputy Governor, I beg your pardon, in the Central Bank of Ireland, had made a similar kind of speech, pointing out areas where the banks had yet to travel a distance, particularly around the tracker mortgage issues, and looking at loan arrears and how they were dealing with those. So what does the regulator hear when they hear a comment like that from the KBC chief executive? Well, firstly, what the regulator wants to see amongst the banks is that the culture and behaviours has actually changed. Now, is there evidence of that from 2012 to now, 2010? Well, you look at the tracker mortgage scandal, look at the numbers involved in that. Over 40,000 consumers due compensation, almost 700 million euros in compensation to be paid, and 99 families lost their homes as a result of the banks and the tracker mortgage scandal. So that's not evidence that you're looking for that things have changed. On the back of that, then, the central bank did their own review of the culture and behaviour in Irish retail banks, and they had no difficulty coming up with several recommendations for how the culture and behaviour in banks needed to change, things like a command and control style or over-optimism. So what does the central bank hear with a comment like that from KBC? Well, firstly, they will absolutely have heard it. Secondly, they absolutely will not respond. But thirdly, and importantly, what they will think is that it will reinforce for them that their approach and their findings in that report on behaviour and culture were correct, and that their approach to the senior executive accountability regime, which is coming into play next year, that they're right to push for that. And as they work through the detail of that regime and they have decisions to make between whether to go, let's say, harder or softer in how that regime is laid out, then you can expect where the decision is going to lie. More is required.